one of the things I know we talk about, and you work with a lot of this audience, as do we, in terms of business owners, or I think even large families. But what are some of the best, in your opinion, estate planning opportunities for business owners and larger families with even larger net worth estates going forward?
Yeah, so I will look at kind of current 2020 situation, and we know we have depressed asset values, depressed business valuations. We also have very, very low interest rates. And so that combination of things leads to the use of some different types of estate planning techniques that you don't always see used when we have higher valuations and higher interest tax rates. A few of those that we've recommended, at least people take into account, kind of going from pretty simple to pretty complex, but it can work. Starting at the very simple, some individuals, if they do have children, maybe now who are running a business, or family members who are getting into real estate or buying up apartment buildings or other rental properties, and they don't have liquidity to potentially do what they're hoping to do. We've seen a lot of interfamily loans, knowing that third-party lenders have pretty low interest rates right now, but family members have even lower interest rates that they can charge. So the IRS releases the applicable federal rate, which is the interest rate, the minimum that can be assessed or charged when there is a loan. And in July, I went through and looked. It's kind of crazy. They're all close to zero. So that AFR that I referenced for July, if a family member entered into a loan with another family member, so that family member didn't have to go to a bank to get the loan, if that loan was to be repaid within 3 years, the interest rate is 0.18%, which is crazy. And beyond lower than 08, 09 rates, if that loan is in effect between family members for between 3 and 9 years, the current interest rate is 0.45%. And then if you want a loan, family members want a loan that lasts at least 9 years or more, it's 1.17%. So definitely something people are taking advantage of with family members who might be doing different projects or see opportunities, and other family members have some liquidity and don't necessarily want to make a gift of it, but can do these loans, which is kind of a very friendly type of loan. The other types of techniques I'll see kind of in the middle, so that was kind of more straightforward loans, grant to retain annuity trust. So it's a type of trust, and estate planners like acronyms, so a GRAT. This type of trust, it's an irrevocable trust, and it's meant for the person who creates the trust, it's meant to allow them to transfer assets, whether it's potentially business interest or it's stock or it's real estate. They're transferring this asset into the trust without it being seen as a gift and without using lifetime gift tax exception. So the individual who's creating the trust receives back an annuity payment for a set term of years, and when that term of years ends, the asset that's in that trust then goes to whoever the beneficiaries might be named by that individual. And why you see GRATs as a common technique that's talked about today is that low interest rate again. As you're assuming whoever's creating the trust, you're putting that asset into that GRAT, and you're assuming that you're going to beat those really low, those interest rates I referenced. You're going to beat that interest rate. And so you're essentially getting more out of your potential estate into the hands of a beneficiary, but it's not seen as a gift that's cutting into your lifetime gifting amount. A third option, and I'm getting to like the more complex, are called intentionally defective grantor trusts, or IDGETs. This type of trust, again, it's irrevocable. You often see it with family business owners, so it can be a way to transfer interest in the family business to children or to another individual, where you don't want to just make a whole gift of it. You want them to have a buy-in, or maybe you need some income stream coming back to you. You're not able to quite yet give a large amount of the family business. This IDGET, this type of trust, can be used to make a small gift but then you're essentially selling the rest of your assets so that closely held business interest to the trust, of which your child or children are beneficiaries, and the trust is giving you a loan payment back. And it all goes back to that tied in with the low interest rates. So you're not you're kind of giving a really good interest rate to the trust, to the beneficiaries, but you're also getting that asset out now with that depressed rate, that depressed value. And so the intention is hopefully it'll grow in that trust and it'll grow outside of your estate. So there's estate tax planning there, but there's also that stream of income that's coming back to the individual, at least for the length of the loan. So those are the mix of not as complex to a little bit more complex ways to take advantage of the low interest rates and the low values that we have right now.
Yeah, those are. I mean, some of those are complex, I think, strategies, but some of them I think are simple too. And one I do hear or see sometimes business owners or families forget about or not think about necessarily are those interfamily loans, which because again I agree we are at generational lows on interest rates, but also things like inflation. And now that's a different discussion, but because of that, it's important for all things, not just planning, investments, estate, insurance. I feel like there's opportunities that might exist here. So it's good to hear that you guys are looking at those things for your audience.